Take a look at oil prices this morning. Oil up right now to $80.89. Yesterday, its settlement was the highest we've seen in almost 7 years. So people have been watching as we continue to see these climbing prices. Joining us right now with his take on the growing energy crisis is Stephen Richardson. He's the head of oil and gas exploration and production research at Evercore ISI. And Stephen, you recently wrote a piece that was pretty interesting. You talked about the Goldilocks outlooks for U.S. crude. And it may be a Goldilocks outlook when it comes to crude oil prices, but it is not for anybody who uses oil at this point. Where do you think prices are headed?
Well, what we're experiencing is really a tightening of balances based on the, we had a pretty significant hurricane in August. And if you think about Ida, we lost quite a bit of infrastructure. And so what you're seeing is a tightening of balances based on that. And prices, crude imports have been very, very high, and domestic supply, as we referenced in that piece about a Goldilocks outlook, isn't really reacting in as quick a timeline as we would have expected in the past. And so I think that's what's propping up prices. And like I said, I mean, I do think that we could be in a period here of at least above mid-cycle prices for quite a bit. And as we're seeing on the screen, some upward momentum yet, because it's unclear where that incremental supply is going to come near term.
Near term, you're talking about higher prices. What are you thinking over the next couple of years?
Well, I mean, I think that what's really interesting is if you look at if you look out at the futures market, 2023, where we do think you're going to need to see some U.S. oil supply growth, that curve has come up quite a bit. It's come up to kind of the mid 60s, which is probably a price that starts to rebalance this market. We've got to remember that you've got OPEC Plus still has, quite a bit of spare capacity. They're going to be bringing, upwards of 1.5 million barrels to the market between now and year end or into 2022. And so I think that's the things to watch will be how that dynamic plays out. But, from a mid-cycle perspective, we still think the oil market can balance itself around 60.
Stephen, there has been a lot of debate about the ESG movement and what that has meant in terms of the big oil companies not spending as much on exploration as they have in the past or as they had even planned to before you had activist investors get involved with some of this. There's a big debate about whether that is causing some of these high prices and making those high prices stickier or not. Where do you come down on it?
Well, where we come down on it is, there's no doubt that, that movement has quelled some of the appetite for long-dated investment. And that will ultimately have an impact, certainly as we're seeing in some geographies where you can't transition quickly enough to alternative power sources in electricity generation, for example. And so I think what what you're seeing is the market realizing that there will be some tightening before we can transition. The way we like to think about it is, the market wants the energy system that we're going to have in the future, but we're still stuck with our current energy system, and we still do need these hydrocarbons in the near term. I think in terms of investment, I think what's really interesting is in the U.S. at least, it is not it's not just the ESG movement, but it is also the desire for higher shareholder returns and the fact that a lot of the U.S. independents, which really drove U.S. supply growth for the last 10 years, are really on the sidelines, and they've made pretty significant commitments to return cash to shareholders. And so I think that's the other dynamic, beyond what you're reading about ESG and some of the reinvestment in alternative energy that's playing out here.